Greetings, everybody. This is Jeff Scott, and this is April 19, 2015, and this is my weekend report. I've entitled today, From Support to Resistance and Back Again, and you'll see when we go through the charts that support and resistance seem to be getting closer and closer, and one of these days we'll either break up or we'll break down. But right now, I guess we're dancing with Mr. Darvis, although probably not as much a box as it is a sort of a coiling triangle pattern. Here's my email address, hgsidoc@gmail.com. If you'd like to reach out to me, any information about what I talk about, or to find out more information about my live meetings. As always, it's for education purposes only. I'm a doctor, not a broker. Most physicians lose money with their investments. I am not affiliated with my software vendor, any software vendor or trading company. Anything I demonstrate, I use myself, I pay for myself, and I get paid nothing to talk about it. Trading involves risk. You and you alone are solely responsible for any investment decisions that you make. As always, I rely heavily on those that have taught me and the influences that I have. I started with Canceling with O'Neill. I accelerated with Morales and Catcher. I automated it and made it even better with Woodward and Brown. I added some things I learned from Alexander Elder. Developed a better strategy for actually taking trades and getting out of trades from the work of John Person, who also does top-down investing, and I've had the chance to be in his trading room of late and show how I link my scanning in HGSI with my real-time trading, swing trading with John's indicator set, Van Tharp for money sizing, Anna Cooling for money VSA, Dorsey really about comparative relative strength, and then my buddy and partner in the upcoming Florida meeting, George Lee. I have a lot of programs. I purposely try to remember to hide my desktop so I don't have to explain why I have so many programs. But I use TradeStation, Thinkorswim, and Genesis. And for analysis, as you see, I use mostly HGSI and EdgeRater. I do lots of different seasonality, and I use a number of websites. Market thoughts. Are we topping? Sure, we're topping. Topping is a process. I mean, we have some. On the NASDAQ, almost looks like a head and shoulders is forming. But have we seen the high of the year? Who knows? I have to trade the market I get on a day-to-day basis. I'm aware that we could be topping. I'm also aware that this is the third and seventh year in a presidential cycle. Both years are heavily favored to be positive. I'm aware that if you take out the January high in the Dow, with the subsequent close of a month, that there's never been a down year in a year ending in a 5 since 1905 when the analysis started. This year's ending in a 5. But I'm also realized how long we've gone without a correction. Now, Friday happened. We had China tightening on margin, concerned that a 5 to 10% hit in their markets, which have really outperformed this year, would have substantial impact on the world markets. Greece is being Greece. They owe some money. They need some more funds from the EU. And they're like my kids. They want to spend, 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 spend. They don't believe in saving. And they have their hands out to the Germans, in my kids' case, obviously, to me, to get handouts when they run out of money. Well, something's going to have to give there. I heard from a speaker about how Germany really can't afford to let Greece out of the euro, out of the EU, because then the euro will go up and it will get less competitive for the EU. You have growth concerns worldwide, and not only growth concerns, you have issues about that the growth is not really equal in different regions, and you could actually see the U.S. with more growth raising interest rates while the rest of the world is easing, which could have issues. And then things that are hard to explain, like Bloomberg terminal outage affecting the EU and Asia, pretty much over by the time our markets open, but in the Forex markets especially caused havoc. And then it was options expiration. I think all this comes together and gave the U.S. a great excuse for a sell-off. And if I have to bet, this isn't the beginning of the end, but I'm not sure that this pullback is necessarily over with. But we'll take a look at the charts. And as I looked at it, there was damage, but perhaps not as much damage as I might have thought. As always, I have to know where we are, and clearly we look like we're entering stage 4 with what happened on Friday, but it happened so quickly. I won't be surprised if we're just in a pullback and we have another leg up. And what's happened here is we've taken this typical cycle. And I mentioned before, it's like, kind of like we cut off the top and we go up, we come down a little bit, we go back up, we come down a little bit, we come back up. And it's almost like a Darvas box, although this one seems to be coming to a head. Now, I base my trading techniques and style based upon what part of the curve I'm at, and this is not a time to be making massive one-sided bets, probably either side. And so I have been raising cash, I've been taking smaller positions, I have been selling premium, but I am playing to both the short and the long side carefully and recognizing that this is a very tenuous market, both ways. As it says in my quote on the bottom, it's a judgment call to hold stocks over earnings dates, or in that case, to buy additional stocks over earnings dates. I elected not to buy Netflix. That, unfortunately, did not help me out, but I live to fight another day. It's bad judgment to not know when your stock's earnings date is scheduled. On the right here is a list, and you can see this is a big week of earnings. We got Banks and Halliburton on Monday. It should be interesting to see what happens. This is a very busy week, and one would expect it to move markets. On the left-hand side, we got some claims on the 23rd. We got some gas and crude inventories and some mortgage stuff, and then durable goods probably, I'm not sure if that'll be a big mover. I think the big story this week is going to be earnings. Tonight's agenda, I have my introductory comments. We'll take a look at the market from a top-down perspective using my favorite tools. We'll also, as time allows, look at some bottoms up. Probably will not do any toss tonight. Just to remind everybody, this meeting is happening. It is from June 27th through 29th. It is before 4th of July and after Father's Day. It is at the Marriott Resort at Singer Island. I can't emphasize how beautiful my view is as I look out, the same view that you'll have at this meeting. Saturday, Sunday, Monday. It's designed for traders wanting to become better traders, to work towards being their own gurus. You can be, but it's not necessarily that you're users of HGSI, EdgeRater, TOS, TradeStation, and Seasonality. And if you are users, I hope you go home much better users of the programs that you've spent money on. You can see some of the topics. We'll be reviewing much of what I've learned from 20 years of following Ian and Ron from an HGSI tools and philosophy perspective. Both George Lee and I will share what we've learned from other masters. We'll talk about how we use various tools, web-based and software tools and trading tools to find setups. And then as requested, I will be talking about how I do options for directional trading. And I think you'll find that George does them differently. And the neat thing about options and different deltas and things is it's really something that you can adapt to be what you want it to be. Recognizing that not all attendees will have a great understanding of options, I'm going to do probably a 45-minute basic options primer just to introduce you to the basics. And when I talk about my options for directional trading, I'm going to talk about 3 or 4 different strategies. It's not going to be an encompassing options course. On Sunday, a term from Alexander Elder, how do you find your A trade, or how do you find the trade that you like? And I'll demonstrate how I take the same trade over and over and over again, and how I use my different tools to help me find stocks. We'll talk about money management, position sizing, stop losses, how many positions you should have. We'll do some, if the TradeStation gods are on my side, I'll be doing some modeling live, showing the impact of different stops and targets on various results. We'll be looking at the market for trades, and we'll be doing portfolio protection. On Monday, pre-open prep, live squawk box and trading. What we did the last meetings, George and I had our own projectors and our own computer setup, and we basically talked, one after another, back and forth, what we were seeing, what we were taking, and then discussing pops in the market and what to do with them. George will be talking about how we use a seasonality, and then I'll review after the market closes in about 45 minutes. We'll do, at 3:15 I'll do at 4:15 I'll do a market ending update. It won't be the full update, but it will be an update that has closing prices. I'll do a full update using that data and talk about how I'll get ready for Tuesday. So it's a very full weekend. It'll be live didactic presentations. It will also be some small groups. If you attend, you really don't need anything. Just get a cab to the hotel and a cab back, because I'll provide breakfast for Saturday, Sunday, and Monday, lunch for Saturday, Sunday, and Monday, dinner on Saturday and Sunday, screencasts of all podium presentations, as well as, if technology allows, HD video of all presentations, unless the speakers ask us not to. And courtesy of Bob Meager, the HGSI Think Scripter Extraordinaire, will be providing toss indicators. The cost is $1,000 per person. That includes everything above, and I have discounted hotel rates at $199 plus tax. The speakers will be myself, George Lee, and Chris White from EdgeRater. Depending on availability, I have a number of other local experts that I'll try and get involved. In the past, I've had people like Jan Arps, John Person, folks from Lowry Research, and others speak, as well as occasionally people from the technology companies to help us become better users. There's no software ownership necessary to attend. Just bring a basic stock and market knowledge, and let's teach you how to make money. Contact me at hgsidoc@gmail.com. Registration is confirmed when payment is received. We talk about seats are limited. Everybody always says that. George, Chris, and I are 3. On Saturday, the room is relatively tight. I don't think I can put more than 20 people into that room. So that means there's 17 to 20 spots available. There have been 10 people, if not 12, that have already emailed me. It doesn't count until I get paid. Now, if you email me, I could also give you a different email address for PayPal, or you can send me a check. So if you're on the fence, I think you probably don't want to stay on the fence too long, because this meeting will fill up like the others. Lastly, we'll see you in Florida, and let's get on to the markets. This is the hotel. This, I believe, is the beach. As you can see, the beach chairs, and here's a close-up. And what better place to bring your loved one while you're learning trading? They can be enjoying the sun and being very happy with you. And they will be invited to the dinner on both nights, at least one guest per person. All right, enough of that. We will love to see you there. Let's get started. Every picture tells a story. And here's a picture that I think tells a story of what happened in the market on Sunday. And let me shut that down. Sorry about that. So this is my Genesis Trade Navigator scan, and it's something that I have up all day long. And basically, I've got futures. I've got the E-minis. I have the NQs. I have the TFs. Then I have the NYSE, which is not a future, and I have the YMs. And I monitor these throughout the day. The first one is currently set, I believe, at 60 minutes. Let me check. It's 15 minutes. And the market opened down here, and you can see the S&Ps are up about 4 points from when the market opened. And we'll see if that stays that way or not. The NQs are up 4 points. The TFs are up 3 points, all little gap ups. And the YM is up 29 points. That's not considering the impact of fair value. If you want to look at what happened on Friday, this is a market that pretty much at 6 a.m. sold off. I was actually in a meeting, And I was watching the futures at about this time before, as I was getting dressed to go to my meeting, and you know, I was feeling pretty good in myself. I had made a ton of money this week in my accounts. This is Thursday, just a huge run up throughout the day, and then I watched the futures sell off, and the question was whether this was the beginning of something real and would persist, or was it just a blip? And as you could see, the markets, at least this case the S&P, sold off, bottoming at 2 o'clock. And frankly, from a low here on this bar of 2064.50 to a high or a close on this bar at 2076, there was a 12 handle run on the S&Ps in the last 2 minutes. So this was a market that sold off throughout the day until about 2 o'clock, and it rebounded. Will we continue to sell off? I think time will tell. This may have just been a relief pop in the futures, but one thing has happened over the weekend, and after reducing individual margin allotments, I guess, or percentages in China, apparently a lot of normal and less than middle class folks were mortgaging everything they had and using money to buy stocks so they could become rich. Now, when have we ever heard that happen in this country before? We know what the usual outcome is. The Chinese raised or reduced the amount that they could margin, and that impacted heavily on the Chinese concerns about the Chinese markets and caused ours to sell off. Over the weekend, apparently they reduced some of the reserve expectation on banks, and at least the short term is that might cause some stability. Now, we'll have to see how the Chinese markets trade today, if they trade today, and also get an understanding of whether or not we're going to accept that that's a big difference. Now, I also want to show you that on Friday, on my daily charts, I had a sell signal. These are Persons indicators on Genesis, but there's a sell signal on the daily charts on all. And had we not reversed, I thought we would end up with a sell signal on the weekly. So we're still on a buy signal on the weekly, sell signal on the daily. We're up a little bit on the futures, and we'll come back to them later. All right, so the first thing I always like to understand is how was last week. So one thing that I do is I do a thing called a group performance analysis, which is easily done in HGSI. And those that have been my followers know that I look at a lot of different user groups. And one of the reasons why I create them is to understand what's working, what's not working. So the first thing I see is last week is most of the groups are red. So that meant it was a down week. We all know that. Now, for the S&P, it was down about 1%, at least from Friday close to Friday close. HGS 100 was down 1.3, and the IBD 50 was down, where was that? Somewhere in here. Probably right in front of my face. I know it's here because I was looking at it before. Doesn't really matter. Let's just suffice it to say that the IBD 50 is down here it is down 1.63. Now, had I left my holdings intact a week ago, I would have been down 0.74. Not a great week. I actually made money for the week, but it just shows that the stocks that I trade and follow, whether it's my buy watch, which was down 1.24, my filtered buys, which are 0.43 down, which means I apply John's signals to the buy stocks, meaning the stocks that looked attractive in HGSI. They performed at least as good as the market, probably a little bit better. One of the remarkable things is what happened on the Hindenburg, well, not the Hindenburg, but on the buckets. There's no Hindi Omen. That's not a shocker, but the amount of new highs basically went to zero. 0.69 new highs, 0.38 new lows. This was a broad-based sell-off that took no prisoners. this is what it looked like on the buckets on Wednesday. We knew a correction was close because we're now 14% of the stocks, or not necessarily correction, but at least a sideways move. Because when you get 14% of the stocks in the S&P 1500 above the upper Bollinger Band, that should tell you that you're a little bit extended. And clearly, we've had 60% or more stocks above the midline in the S&P 1500 Bollinger Band for quite some time. And this is what it looked like on Friday night. As you could see, we now have got 14% of the stocks in the S&P 1500 drop so much that they're actually living now below the lower band of the Bollinger Band. Now, when we get to this point, I know that I should expect, no guarantee that it will happen because it only works until it doesn't work anymore, but one might expect within the next 1, 2, or 3 days to see a recovery as we get further extended to if there's any additional movement to the downside. Now, here's sort of the salt in the wound picture. This is my major market view, and it's looking at one-day change, percent B, and then the Woody indicator for buy-sell. And in everything you look at of mine, green and blue are good, red is bad. And you could see that on Friday we had a line of kahunas across all major market indices. We're all yellow with red here in the, let me take it up, the IDX. Other than that, everything is yellow, but we had massive deterioration in the percent B, and our buy-sell signal now is leaning towards a sell here, but predominantly we have caution. Now, how will I use this information? Well, the buckets have told me to be ready. I'm going to look for the blues to come in, the kahunas to the upside here, the movement in percent B of at least 0.24, and try and reverse this. And sometimes you'll see one, and then there's a couple days later, after you get extended to the downside, you get a reverse and you go back to green on the buy signal, and sometimes you don't. Here again, we saw a reversal. We'll see if we get one, but this is a pretty strong signal. So, to put it mildly, caution. All right. I actually wanted to save that. That was stupid. All right, next thing I do is I quickly pull TradeStation over, and I may have some resolution adjustments to make. Let's see. Here's my TradeStation. And I use TradeStation for a number of things, but for right now, what I'm going to use it for is to look at the market. Now, one of the places that we may, oil's up 60 cents and gold is up $5.10. E-minis are up 450. These are the 3X bulls. You notice anything about them? All except for the Treasury. And Treasury sort of goes the opposite of the stock markets, the Treasury, the TYD, and the TMF. All the bullish 3Xs, whether it's gold or energy, financial, big stocks, little stocks, medium, were to the downside. And in fact, not only that, but many of them had pocket pivots to the downside. And again, these occurred in the treasuries, but you had a MOBO breakdown from a squeeze in retail. Contrast that on Friday with my 3X bears, and you could see a number of these bearish ETFs. And again, these are the opposite. They'll go, and I should probably move them around with the ones above there because they're really not, to me, bearish on the market. They might be bearish on treasuries, but they go opposite of the market. But you could see I've got pocket pivots in semiconductor 3Xs, financials, also a MOBO breakout from a squeeze, S&P 3X bears, technology 3X bears, small cap 3X bears, and VX levered, all showing weakness. Now, if you think this market is going to persist, and I don't know why I leave that up for you, and you think you want to go short, these are ways to play the shorts. And even if you have an IRA where you can't go short, you may, emphasize may, M-A-Y, be able to buy contra ETFs. You know, it really helps your portfolio when you have something like Valiant. I've been selling it on the way up, but this has been obviously a big move for me. I guess my average price now is $50. I must have sold some of my cheaper shares. But it's nice to have a few shares of a stock that has a big move. Enough of that said. This is just one of my accounts. I've got a couple others that I'm pretty happy with, but you know, that's all yesterday's news, and it's how do we make money tomorrow. Let's take a look at my elder indicators. And as you've been here before, you know that I like to look at a couple of things on the major markets to get a sense of what's going on. I like to look at three things. I like to look at where we sit in the envelope. Are we at the top or bottom of the range? Actually, probably four things. What's the color of the price bar? Because if it's a red, it tells me that's an elder impulse indicator that says I should not be going long. If it's a green, it's an elder impulse indicator that says I should not be going short. And if it's blue, it doesn't give me a signal. I look for the magenta and the light blue person buy signals, and I look for the little dots on the tops or the bottoms that could represent MACD divergence. So we'll start with the NASDAQ. No surprise, big gap down on Friday. So down at the open, well, that's because the market started selling off at 6 o'clock and the cash markets didn't open to 9:30. It's in a person cell. It's in an elder cell. It's in the middle of the auto envelope. It's certainly not oversold. There's no divergence on the daily or the weekly. On the weekly, it's blue, and it's blue on the monthly. It's dangerous. There's no question about it. To get out of red, for example, this is kind of cool. I can do this. Put it on the next day. What I'm looking at is the crossover. I need a price of $49.85 to become blue. Is that it? That can't be right. Are we closed at 4,900? All right. So what I need, actually that's not true. We closed at 49.31, and I need, I think I said 49.85, as you can see down in the bottom there, to go blue. So I've got to have a pretty good move on the NASDAQ to change to a buy signal on elder. If I look at the Dow and the cash markets, big drop down at the open, red, red, blue, in a sell signal, lots of weakness in the Dow. I look at the Russell, similar picture, long down bar, and in a person sell signal. It did have MACD divergence, but a day like that will reduce it, blue and blue on the out time frames. Now, what we don't know is, are we going to have this go sideways and come back up, or is this going to be the beginning of something bad? My guess is we go sideways and come back up, but I'm also a perma bull, and one of these days it's going to say it's going to go down. Semiconductors are weak. Again, red sell signal. The S&P futures, here we have today this little notch in here, a little bit up off of where it closed. Sell signal, no surprise. NASDAQ 100, sell signal up a little bit today, but you can see, in fact, let me go into this and take it down a time frame. You can see on a 15-minute chart that we really bottomed out here about 215 or so and had a big up move really off the bottom. And you notice we turned blue, got a buy signal, and had a nice move up. So will we get a continuation of that, or are we going back down to test the lows? We'll have to see what happens tomorrow. That's the NASDAQ. S&P 500 in the cash market, sell signal red, blue on the weekly. S&P 100 red, sell signal. So one thing's pretty consistent. Everything's red, and all the dailies are in a sell signal, but not all the weeklies. All right. Now we'll go into HGSI. And I'm going to start by going into my top-down view. And I'm going to go down to Major Markets Plus, which is in the Woodward and Brown group. And what I could see here, and what I'm looking at, is I'm ranking by raw combo that U.S. oil and gasoline are up at the top. No surprise, I think with the down week, I think energy stocks are up over 3%. And frankly, that's the reason why I had an okay week, was because I have an overabundance of energy stocks. Now the Nikkei just opened up 0.84% down. Korea's a 0.5% down. And again, remember, these were all closed when we sold off, so they may sell off in sympathy with the U.S., and then maybe they'll bounce midday in response to the Chinese easing, or what I would perceive as easing. So it's not a great week for markets when the Dow, the NASDAQ, and the S&P are all down here, and you have gold, silver, and commodities up at the top. Let's take a look at the S&P 500 and see if we can't get some targets here. So the first thing to notice, there's no volume on the S&P here, and there was no kahuna on the daily charts. I thought there was. So, yep, there it is. There was a kahuna on Friday. I know I was missing something. But let's go, and there are kahunas on all of these. Let's go to the simple moving average chart that I like to look at. And this has been my support. So in reality, it worked. It held. And if I just extend this line up, we traded down to support. Now, where's my resistance? My resistance is probably here. So here we now have a wedge forming, kind of I guess it's an ascending wedge. And, are we going to trade down and then up and then down and then break out? Or are we going to break above? Are we going to break down below? I mean, all these are unknowns. Bottom line is we've been in a training range, and all that we do is we go to the top and we come down to the bottom, to the top and the bottom. But we're getting to we're sort of coiling into the narrow parts of the wedge, where at some point one would expect the market to declare itself to the upside or the downside. So we haven't broken major support. We actually traded down to major support. Let's take a look at the NASDAQ. It's the S&P 1500. On the NASDAQ, here's what I was looking at. My support sort of was this area in here, where I had the rising 50. Well, where did we trade down to here? We traded down to the 50 and we held. I would think that this area here is going to be important support. And if we can hold there and bounce off that 50, maybe we can continue our uptrend, and maybe we'll be able to go out and start to retest new highs again. Are we in a trading range? Absolutely. Did we break the bottom of the trading range? No. Interestingly, we did hold right at that 50-day moving average. So that's two that we held at support. How about the Russell 2000? So the Russell 2000 was in sort of a wedge, fell back into the wedge and broke above the wedge here. And if I extend this, this is probably where my support is on the Russell 2000. Or one could extend this up here. So the Russell 2000 has extended a bit below my support here, but it's sort of in this range between the two areas that I would have picked. Out of curiosity. Now, if I extend a trend line up from the bottom of the move, taking into account this low here and the low here, we are certainly in a range of support on various trend lines that I might draw. Again, third index traded down to support. If these hold, then we've got a market that can get better. If this doesn't hold, then, our expectation is we're going to get our correction. And then lastly, those 30 stocks that we care so much about, the Dow Jones Industrials. Again, same old story. This has been our support. It did trade below it, but closed right on support. And it too is probably in the midst of some type of a wedge formation as well. As this wedge gets tighter and tighter, we go from top to bottom in a single day. We are going to break at one point above or below. So I think we've got 4 major indexes threatening us sitting on support. But all of them are in this coiling pattern where they're bouncing up and down between resistance and support and have been doing it for several weeks. The canary in the coal mine could be looked at as the transportation average, where it's dropped below the 200-day moving average and has not been able to get back upon it. This is the weakest of them. I mean, I guess we could do something like this and say it's also near support, but unlike the others, this is the only one that has knifed through and was not supported on this pullback by their 200-day moving average. So transports are weak. Let's take a look at the other side. Dollar traded off this week, right at support now on the 50-day moving average. If the dollar bounces off support and goes high, that could be bad for parts of our market, especially those that trade internationally and require on sales ex-US. The dollar's weak, then you know what that means for gold and silver. Gold broke above the 50 here. I'm not sure if that meets the definition of a squeeze, but when I see all these moving averages come together, and as you could see, gold is squeezing right here, but well below the 200-day moving average, and silver is not squeezing, it's below the 50. So gold and silver had little moves up, I guess more gold so than silver, but they also still look pretty weak to these eyes. And if I look lastly at oil, oil's trying to make a comeback, and the debates are all over. Have we seen the low? Have we not seen the low? I'm trading it based upon it's in an uptrend. It's the strongest of the sectors right now, and I'm heavily weighted. And if you don't believe it, that oil is doing well, look at someone like Schlumberger that lays off, has met lowered expectations, but certainly having its issues. Now we'll see what happens as it's got to get above its little area of resistance on the 200, but you could see the move that Schlumberger had. And in this group with Schlumberger, you got Halliburton going to have earnings on I think tomorrow. So energy stocks have outperformed. So what do I say after all this work? I'd say the markets look tired. They look sick. They're on support. They can bounce from here. And if they bounce from here, they can go right back up to resistance. But I showed you how close support and resistance are getting together. So at some point, something's got to give. And when something gives, I expect it to move a substantial amount. I just don't know in what direction. So I have to be prepared for that in the market. Next, I want to look at major industry groups. You can see I've got 176. Now, what's interesting is we're down to 3 or 4 of them that actually were to the upside this week. So base metal groups, changed index group, Freeport-McMoRan, which is copper, and it's gold, and it's got some oil, and that might be what's driving it as well. It had a very nice week, and let's get my stuff on it. For those that are new, my moving averages are always a red 200, a blue 50, and a green 17. Magenta is an 8-day exponential. The rest are simple. These red and green dots are SAR. Down here I have my pocket pivots. I have OBV and a 10-day moving average. I have my kahunas. I've got mobile breakouts, I got squeeze, I got Bible gap ups, I got bongos and force and distribution. Green is good, blue is good, red is bad. So you can see Freeport-McMoRan looks pretty good. Came out of a mobile breakout from a squeeze down here. Everything's green. Anna Kahuna had a pocket pivot the day before when it made its move. It didn't do much on Thursday and Friday on a rough day. Earnings per share, not great. It does pay a 6% dividend. I will tell you, as I looked at my 500 to 600 stocks today, the dividend seemed to be a big deal, that so many of the stocks that made it to my interesting list are dividend payers. The next one on the list was Alcoa, less than 1%. Its earnings are out. It had a little pop and pulled back some on Friday. Actually, end of the day, about flat. I don't usually go below the index, but I wanted to show you Kaiser Aluminum, KALU. Also, CENX is another aluminum play that looked like they want to break out. I saw very, let me emphasize the word, very few breakouts to the upside on Friday. This was one of them, and I don't remember what this was for. Let's see if I can get it. Up because paying a dividend and buying back more shares. So something might be going on in the aluminum patch. So that was the first group I wanted to look at. Second group was tobacco. Why would tobacco be up? Well, I already said why. Dividends. These are defensive stocks. You buy them in times of concern. They're up off the bottom. Everything's green here. Pocket pivot on Friday. Kahuna on Thursday. You see OBV is heading north. And earnings per share growth is non-existent, but a 4.7% dividend. Reynolds American, nice uptrend. Pocket pivots, mobile breakout, everything is green, 3.6% dividend. Lorillard, 3.7, similar to the last chart. So tobacco stocks are working because they're defensive plays and they have a dividend. Rail and freight. Now, are they coming up because of thoughts that the shale market's okay and energy is okay? Are they coming up because the world is realizing that energy is only a part of their business and their energy costs to function are lower? Are they coming back technically? Well, they've been beaten down pretty hard. This is CSX. If I remember correctly, it beat earnings, pays a small dividend, makes money, is trading below the 200-day moving average, kind of like transports, would like to see it get back above the 200. It did have a kahuna and a pocket pivot. Canadian Pacific Railway, again, below the 200, looks like it wants to go up, 0.6%. Union Pacific, again, deep pullback below the 200. So freight, railways are there. Not sure if it's because they're done going down, if they pay a dividend, or perhaps they're up because of the energy market. And then precious metal and mining. We talked about gold and silver benefiting from the low dollar, and perhaps to some extent gold could benefit from some of the turmoil going on and concerns. Silver Wheaton, it's hard for me to get excited by stocks like this, pays a small dividend, kind of at its lows. American Barracks trying to get back up, still going to have to get above that 200-day moving average, so you expect some resistance there. Newmont Mining, actually a fairly interesting looking chart. It's got earnings per share growth coming back. That's nice to see. It's broken above the 50, had a couple of doji days on a rising OBV. Everything is green, except it's still distributing. AU, Anglo Gold, and Shanti. Looks like American Barracks has to get above that 200-day moving average, but certainly trending up lately. And here's Alamos Gold, broken record, trending up, has to get above that 200. So that's it from the upside. So right away, that should tell you that this is a tough market. Now, when I saw that, I said, let's pull back and see what's been moving up over the last 5 days. And if I pull out to 5 days, I bring in a few other things. I bring in exploration and production. And we'll just take a look at a couple of these and see if anything here looks good. I own a number of these companies, and these all have a similar chart where, just like gold, They've come up. And if you look at something, for example, let's take a look here, as would have been a good buy point, although it struggled for a few days after the buy point. This is a Southwestern Energy. This is a high close doji with a pocket pivot, on balance volume, taking up over its moving average, breaking its trend line down, a mobile breakout starting to turn green up above, and a nice move up since. That's Southwestern Energy. Here's Anadarko Petroleum, looks even better, got above and held the 200-day. Horrible earnings per share and share growth. Range Resources trying to get back to that 200. Gulfport Energy broke above it, had a doji on Friday in a bad market environment, probably going higher. I didn't like its earnings per share growth. So this might still be a good place to be playing. Integrated Oils, Petrobras. We've been talking about this one for 3 or 4 weeks coming off the bottom. And, you know, what's not to like here? Well, what's not to like? Corporate corruption, has stocks down a ton. It's Brazil, and no one trusts what's going on there. The prosecutor got killed before he could file charges. High levels of government, whatever. Doesn't matter. Here's a stock that will just go to a weekly view. You can see has been in a downtrend since September of 2014. It looks to me like on both a weekly chart and a daily chart, it's done going down, and it probably has room. Conservative person might wait till it's above the 200. Somebody else might be buying it now, and a smart person probably bought it back here when it broke above the 50, which was a high close doji, and everything's green above. BP is at the 200, pays a 5.6% dividend. We've talked about it for the last several weeks. A lot to like there. The dividend, the chart pattern, a lot of discussion about them being taken over, and it's in the right sector. Same thing with Shell, broke above the 50, retested, still has to get above the 200. So integrated oils might be a place for you to go play, especially something like BP. We looked at base metals, oil and gas services. I already showed you Schlumberger once. Let's just go through a couple of them and see if anything else looks interesting. So Schlumberger, as much as I love it, look at the volume on Friday. I have to be concerned that it failed at the 200, and it better get above quickly or I'll be out of my position. Rig, broke above the 50, not doing much. Seadrill, this is one of these big dividend payers that I believe has suspended their dividend. So what you have here, except for Schlumberger, is junk off the bottom. Next one over is tobacco we looked at with depression metals, internet-based services. So this is a Chinese internet retailer. A lot of these are Chinese stocks, and this is one that had earnings come out and then a nice move up, although it still is not profitable going out the next couple of quarters, and a huge PE. All right, cement and aggregates, coal operations, steel. Now this is interesting because last week I saw a number of the precursors, the ore companies, make my list. Now I'm seeing steel. But as you could see, these are, quote, Jesse Sign type stocks. Stocks have been beaten down that are starting to move. BHP Billiton, long downtrend. Cliffs Natural Resources, and Schnitzer Steel have all been in deep downtrends, and I think they're still in be careful zone and careful catching a falling knife, although perhaps the knives have bounced. Midstream oil and gas, I saw a number of them. KMI is one of the ones on my list, as is NGLS, I believe. And GEL didn't look bad either. These are midstream oil and gas, so they're pipeline companies. They pay dividends. This is a 4%. Kind of a flat lower left, upper right, clearly in an uptrend. Kinder Morgan. Here's Williams Companies, dividend 4.5. Here's Targa coming off the bottom, 7.1. Here's Targa Resources. This is 3. I'd go for the 7%. I had to figure out what the difference is. I think Genesis looked okay as well. Taking out the 200 pays a 4.9% dividend. So what's driving these is probably both the resurgence in energy as well as nice dividends. Refiners, they were weak, I thought, at the end of the week. I do have a position in CLNE, small position, and it broke above the 200s. We'll see if it holds. And again, I'm going to be looking to see what Schlumberger does. This is, to me, is very powerful. If you got above the 200 and you held it on a retest, you can go from here. Holly Frontier, sort of in the penalty box, lower right-hand corner, EMES. Delk, nice run up, pull back here, setting up for another run, perhaps doesn't have much earnings per share growth. So I've looked at all the groups to the upside, 2 and the 5. I'm not going to look at chemicals. Now let's just look at what's to the downside. Here's the problem. I got 54 groups to the downside on the 2 days. And some of my favorites, biotech. Celgene looks sick. Let's take a look at the big guys here. Gilead, it's basing, this is a stock that's pretty much got a little wedge going on. We'll see if it breaks above or below, perhaps waiting to hear what earnings turn out to be. Not sick by any means, or not any sicker than it's been, sitting on its 200-day moving average. Biogen, pull back to the 50. We may look back on this and say, what a great buying point as it's been in the past on the 50-day moving average, but we'll have to see. Not if the market sells off. Amgen pulled back a little bit on Friday and bounced. You can see the tail on Friday. Vertex, not bad of a pullback on Friday. I don't know if I got Celgene in here. Let's take a look at Celgene because I thought this one looked like it's weak. As you can see, it failed its 50 and starting to break down. Now, it's got good earnings per share growth. We'll see what happens. I suspect that the market continues lower, then Celgene will follow with it. Curious what futures are doing. Not much different, 5 1/4. Russell 3.4. Gold and oil are still up a little bit. NASDAQ 7. So holding, and the dollar is down a little bit. Actually 0.12%. That's not a small move. All right, so biotech looks weak. What else do I have on this list? Let's take a look at semiconductors. I'll show you a couple of the ones that I follow. M&A Com, I know we're looking at the weak stuff, but if this market bounces, this is one that's sitting at a really nice buy point. Right on the 50, where now this is a pullback to the 50. That's not enough for me. I've got to see momentum come in, and there's clearly the only momentum is to the downside. So I think the point of this little exercise was to demonstrate to you there's not a whole lot to be going long, and there's a lot of industries to the downside. The problem is this is a market that you wonder a little bit of how much range bound it will be, and are we just going to bounce off of support and fail at resistance, off of support and fail at resistance time and time again, and maybe you don't want to get too positional. Remember that change in the buckets from Wednesday to Friday. Wednesday looked like at resistance and Friday looks like at support. So if I might consider not wanting to short a lot of stocks. Now I have a whole list of shorts that I'm looking at. I might want to consider, what do I do about the contra ETFs? So let's just quickly go through the contras. I thought I brought them over here. Let's see. Nope. All right, so let me go back to TradeStation. Remember, the Treasury ones we're not going to really pay much attention to. In fact, let's do this, All right, so let's just take a quick look at these entities and see if there's anything here that might be interesting. I hit the wrong button. Sorry about that. Come on, Mr. Filter thing. You can open up so I can close you. Thank you. Okay. All right, so let's just rank these with nothing. All right, so these are the major contra ETFs that I trade. So if you're a novice to contra ETFs, assume that they are instruments that that trade like a stock, but they're designed to trade 2 or 3 times in the opposite direction of a particular index or entity. So the first one we're going to look at is TZA. So TZA is a 3x bear ETF. So it should behave like a 3 times opposite of a small cap. Well, since small caps have been great since 2009, what do you think the TZA has done since 2009? This is why you got to be careful with them. You see this 200-day moving average? Let's go to a monthly. You could see at one point TZA, if you take out all the reverse splits to 2009, it was an $8,700 stock. But it's had so many reverse splits that it's currently a $10 stock. Now, what does that tell you? It tells you that you do not want to own these as a holding. These are short-term trading stocks if you think the market's going to be making a big move for a couple of days. They can be protection on your portfolio. They are not investments. You can see in a downtrend, high close doji on Friday with the kahuna, mobile breakout from a squeeze, and everything is green there. That's a pretty good looking chart if I'm looking to go long off the bottom. That is TZA, that's small stocks. Here's 3x negative of the S&P 500. Oh, by the way, just as bad as the others, this one is negative, was up $3,200 if you take out reverse splits. And you could see it's had a kahuna pocket pivot, everything's green, mobile breakout on Friday. If I look at a 3x technology bear, TECS, this was actually broke above the 17 with a kahuna mobile breakout. If I want to get short the financials, same story, broke above the 50, kahunas, pocket pivot, mobile breakouts from a squeeze. If I want to go semiconductors, hasn't broke above the 50 yet, but OBV has turned up, and we've got turning green. This is SOXS. If I want to go short real estate, not much momentum came in, going sideways, but already had to move up. Everything is green. Natural gas. Well, it's got its own issues, although shorting natural gas actually looked pretty good on Friday. Emerging markets, not nearly as good looking on the contras, which means there's probably not, they've been doing better perhaps than the U.S. markets because of the strong dollar. Gapped up on Friday. Mid caps, like small and large, kahunas, mobile breakouts, and moving up have to get above the 50. And here's the VIX, a doji on Friday, but on an up day. The point of this, here's energy 3X's, bears. They actually went up a little bit on Friday, but because of the strength in energy, I wouldn't be looking at a bear ETF. I mean, you got to pick your poison, so to speak. There's 3X's bearish on gold as well, and junior gold miners. They are not investments. If you are afraid that the market is going to tank and you don't know what stocks to short, or if you're not allowed to short, they can be vehicles to protect you or to gain on a sell-off in the market. I would be very careful because outside of a sustained sell-off, in my experience, they are difficult to make money with. If you're really crazy, they're all optionable, so you can take a 3-to-1 instrument and then get 10-to-1 on the 3-to-1, and you too can have 30-to-1 leverage. But the reason you can get 30-to-1 leverage and it's cheap is because 30 times out of 30 you're going to lose money on it. But these are some instruments that are available to you if you're not into shorting or buying puts. Now, I did look at a lot of different stocks, and I've got to go through them anyways. So I'm going to go through some of them right now and comment on them, and that'll take me about 10-15 minutes, and then we're done. Mattel, I think we all know what Mattel is. It's in a downtrend for some time now. Did gap up on Friday, broke above the 50, so showing strength here. OBV turned up. Look at the group index is very strong. Everything is green there. Has some earnings coming out 2 quarters out. 5.7% dividend player. Probably a good defensive stock. Target Resources, I mentioned, I was looking at this, 7.1% dividend. VWR Corporation, don't know anything about them. They were one of the very rare companies that I looked at that actually was breaking out. And OBV is heading up, pocket pivots and kahunas, everything is green. And if I remember, this is a recent IPO, but it's one that makes money. VWR Corporation. Kinder Morgan, I mentioned, oil and gas, it's a MLP, pays a 4% dividend. Boston Scientific, another good-looking stock, ran up, base, looks like it wants to go again, lots of pocket pivots. It has earnings, no dividend, must have had some news driving it. Axalta Coating, I've been in and out of this stock a little bit, and I think I want to be in longer term. Allegedly, Buffett took an investment here, specialty coatings. Despite a horrible day on Friday, they had a high closed doji. Everything is green. Might be one to look at. Don't know anything about Applied Optoelectronics, AAOI. It has earnings. It does not pay a dividend. And again, one of the few stocks breaking out. This one actually broke out and held above the 200-day moving average. Schlumberger we looked at already. BMS. BMS, Merck, and others have these wonder drugs called PD-1 inhibitors, PD inhibitors, checkpoint inhibitors, lots of different names, and they will and are revolutionizing cancer care. And BMS has one in lung cancer that's already approved, and I believe will become the standard of care in this country. Since there are 180 plus thousands of patients who get lung cancer per year, and many of them get treated with chemotherapy, and many of them will die, I don't think anybody's going to be dying without getting PD-1 drugs from now on, and these drugs will cost about $180,000 per patient, and BMS is the leader. You're buying it right off of support. The earnings are there without any growth, 2.3% dividend. If you like cancer therapies and new drugs, you want to buy BMS and put it away in your stockings. Small Cap Bear, we already looked at them. Host Marriott Financial Trust, here's a REIT. You could see it's down where it fell in March. It's back there. Looks to me like that, I would call that a base. It pays a 3.9% dividend. I like the earnings. Had a big move up on Friday on a bad day in the market. Here's the ultra short Qs. These are QID, which is, I believe, 2x against the Qs. So the Qs go up 2%. This goes down 4%. So you have a kahuna, pocket pivot, mobile breakout, everything is green. QID, ultra short or short ETF. Here's the S&P 500, SDS. We talked about the 3X. This, I believe, is just a 1 or 2X. McKesson, I talk about McKesson, Cardinal, and ABC all the time on this chat. McKesson's been going sideways since February. I think it's poised to break out. Everything is green. It's in a squeeze. It had some kahunas. OBV's turning up, pays a little dividend, has some growth. These are great companies because they collect tolls on the everything that goes through healthcare. NAT, a number of tankers made my list. They pay dividends. They've got revenue and earnings growth coming in. They may play a role in storing, what's the word I'm thinking of, oil, as we're stockpiling it, selling it out months and future contracts. So NAT is one, pulled back a little bit, had a nice day on Friday, nice dividend at 6.9%. Here's another MLP in a long-term downtrend, probably not the best choice. Pays an 8.3% dividend, but did break above the 50-day moving average coming out of a squeeze. Skechers, another of the leading stocks right now, lower left, upper right, had a great day on Friday. Mobile breakout out of squeeze and a pocket pivot despite a horrible tape. If this market decides to turn and go up, one could certainly expect those stocks that held up the best during the pullback might be leaders. Skechers looks like it wants to be one of those. Tractor Supply, a lower left, upper right stock, but kind of not with a lot of upward movement. Been basing around the 50, and it had a pocket pivot off the 50-day moving average on Friday, so it's got momentum. That looks good. On a bad day in the market, it was up 53 cents. Tenet Healthcare, I'd be nervous because it had a low close doji on Thursday and is below the 200-day moving average. But hospitals are making great money with Obamacare. They're another big winners, and Tenet seems to be, look at those earnings the next couple of quarters. I'm interested in that, but I'd have to see it take out probably at least the doji or the 200-day moving average or the doji before I would even consider getting into it. Acorn, this is a biotech stock, a lot healthier looking than the Celgene, Biogen, IDEC, and others, lower left, upper right. Great earnings per share growth. I have a big position in it, so I'm not looking to add. Essent Group, a number of these specialty finance groups stocks look strong on Friday. I like the earnings per share growth here. It's not a big company. Look at the revenue. Doesn't pay a dividend. KKR is another financial story. A lot of these asset management companies. I have BX. BX had a great week last week. A lot of others, and look at some of the dividends as they come up. KKR pays a 6.1% dividend. Apollo Investment Groups pays a 10.3% dividend. And not a horrible chart where you're buying it off the 50-day moving average, albeit you're below the 200, which is not good, but it's got small multiples, and you're buying it off of support. ZAG, they make a lot of the cases for the iPhones. It's one of my stocks that's sitting right below the PSAR dot. Looks like it's basing. And the way I do is I wait till it breaks above that PSAR dot. I might have an order placed in if that happens. BlackRock's another asset management play, 9% dividend. High base here. Looks like it wants to run again. HFF is one of these specialty finances. Again, they have earnings and good earnings per share growth. Don't know much about them. Western Asset Management Capital, not a great looking chart, kind of sideways at best, but it did break out of a squeeze of some moving averages on Friday and pays an 18% dividend. Navigator Holdings, a number of logistics. This is a marine shipping. It's in a slow uptrend. It's got to get through that 200-day. It's got great earnings, does not have a dividend. Mercer's a paper company, lower left, upper right. Kind of a hammer on the 17-day, 8-day on Friday. Look at the great earnings. This stock with earnings like that is going to go higher. Synchronos Technology was a software company, makes money. All these I picked are because they have a story. All of them seem to be down or in reasonable buy points, and many of them pay dividends. Here's a stock that's in a nice uptrend, pulled back to the 8-day exponential and bounced, and has good earnings per share growth. Icon PLC, sideways with a kahuna and pocket pivots coming in, makes money more than its multiple. I think this one has an opportunity if this market picks up. Lear Corp, sort of the ultimate lower left, upper right, most fairly tight to medium stock. Only picked it because I had a nice reversal day on Friday where it opened down, traded down, and closed up on the day and was just down 50 cents in the midst of a big uptrend, small dividend. Therapeutics MD, know nothing about this, but again, how many stocks are we seeing in an uptrend that didn't get killed on Friday? Note, it doesn't make money. It's a small biotech stock, therefore it's high risk. Talking about high risk, here's a small specialty finance stock, American Capital Mortgage Investment. It pays an 11% dividend. It looks like it's on a bottom. If you're buying a stock because of an alleged dividend, I highly recommend you validate that the dividend is still being paid and not canceled. Phillips 66, we saw some strength in refiners. This is one that I find most interesting. It too is kind of wedging down here, coiling. It does have great earnings per share growth coming in and pays a small dividend. All right, my 10 minutes are up, so Supermicro, I talked about this last week. It broke above the 50 and failed. It's got good earnings if you can get back above it. Anworth Mortgage, another one of these specialty finance with the 11% dividend, good earnings per share growth. These are only as good as their dividends. Spirit Realty, 5.8% dividend. Barracuda Networks, lower left, upper right, big hammer on Friday. Looks interesting how it held up on Friday versus rest of the market. Activist, we talked about it last week. Had you bought it last week on the weekly bar, how much was it? It would have been up 2.26, $2.26 or 0.77% in a bad week. Why did I like it last week? I liked it because it was sitting on the 50. It still is. The only difference is it's had a PSAR reversal, which makes me like it even more. JA Solar, the solar stocks got hammered. This one intrigued me on the 17-day. It has a hammer. On Friday, actually was up on the day 2% on a bad tape. Has got earnings coming into the stock. WNC is actually a truck and train producer. Again, I started looking for stocks that had tails. I don't love this one, but it has been an uptrend. I'd like to see it get above the 50 before I got interested. Celadon Group, there's a number of truckers, not too exciting here, lower left, upper right, small dividend, but nice earnings per share growth. Premier is a group purchasing agent. They really make money on the cost of drugs going through the system on behalf of their member hospital and practices. It's the business that I was in, that I sold to Cardinal and ABC. You could see Friday had a big tail, a big hammer down to the 50. Great earnings per share growth. I think it's almost a bull flag. I'm ready to run again. Fly Leasing, again, pulling back to the 50, had a PSAR reversal. Earnings per share growth, medium, but pays a 6.8% dividend. VIPS, nice run up. Doji on Friday, I'd be looking for a takeout to the upside. A high close doji to get back in, or it may be rolling over. We'll see. First American, other specialty finance with a dividend. Here's that other aluminum play. Doesn't look nearly as nice as Kaiser. Don't know why I picked it except for the massive earnings per share growth allegedly coming in. Carnival Corp, again, not many stocks are trading above their 50-day moving average. And in an uptrend here, this one's had a bit of a pullback. Seems to stabilize with the doji on Friday. A trade above the high of that doji day or a close would be a high close doji and something that I might consider going into. Here's another REIT, Diamond Rock, down at its lows, 3.6 dividend, has earnings coming in. Heritage Insurance, don't know anything about the company, don't really care, except it's a relatively new insurer with great earnings per share growth. Coming back to free parking, the 50-day moving average might be setting up a good buy point. ANIP, another like Acorn, healthcare biotech. ANIP has been going sideways for some time. with some great earnings per share growth coming into the stock, multiple more than its growth rate. Be interesting to see if that doesn't give it a catalyst to go up. Speaking of earnings per share growth, AMAG, great earnings per share growth coming into the stock, going sideways right now. Again, looking at this as a potential catalyst. The last 12 months, you have minus 33 and minus 7, minus 40, plus 6, plus 4, so minus 30 cents. The next 2 quarters are projected to make over $2. What do you think that does to the stock price? You can do the math. And then EBIX, again, looking like it's setting up to have a high close doji, pull back towards support, has a doji. If it trades above the high of that doji bar, I'll be interested in this stock, pays a small dividend. And then here's that Cardinal Health, just like McKesson. Friday was a horrible day, except Cardinal Health was down all of 11 cents on a bad day in the tape. And look how it traded down to the 50 and closed back where it opened, or above where it opened, but where it closed the prior day. Small dividend, good earnings per share growth, not overly priced, and I do continue to maintain a position in Cardinal Health. Qualys is in the same family as FireEye, VDSI, and Cyber. Why did I like it? I liked the 17-day pullback with a sort of a hammer formation here, and a trade above this would be interesting. It's got earnings per share coming in. Edwards Life Sciences, if I put this at a weekly, you'll see why I like this one. Stock's been in a major uptrend, pulled over to the right a little bit of a pullback down towards the 50. And I have this here just to put it on my watch list to see if I break out, pull back to the 50 and break. Don't know anything about Luxoft except it's sitting on the 17 with a hammer. Good earnings per share growth. And here's another trucker, Covenant, lower left, upper right. Not a big ascent, but coming off of the 50-day moving average. Good earnings per share growth. CD Clay Global, similar story, sitting in a squeeze on its 50. Just put on my watch list in case it takes off. I mentioned MA Telecom on a good buy point at its 50. And then Universal Holdings, another stock sitting on its 50 that I'm going to watch because if it goes up from here, it's coming up off of support. Look at the hammer-like pattern they put on Friday. Burlington Stores, maybe this is a hope more than reality. I have a doji right below the 50. If I can get a high close doji the next day or so and take out the top of that doji and get above the 50, this might be ready to run again. This still remains, I think, one of the premier specialty retailers. Skyworks, getting close to setting up on the 50. Again, it's on my watch list because if I can get down to that 50 and some momentum, I might be going back in. Cerner, sitting on the 50. So these are all stocks that are giving me charts that look like they're setting up. Mallinckrodt, same thing, setting up on the 50-day moving average. Avigo, setting up on the 50. So I'm looking at yesterday's leaders. So they might not be tomorrow's leaders. But for each of these, going back months, the 50-day moving average would have been a great time to go in. I just need them to close, get an uptick or up day or an up hour off that 50. Whoops, going the wrong way. Lanet, great growth stock, one of my holdings. Interestingly, how it's sort of gone sideways and pulled back to the 50. It's clearly at resistance, or was at resistance. Great earnings per share growth. Same as Acorn and others that we've mentioned today. Pull back to the 50, interesting buy point. So what I tried to show you were a number of stocks that I found interesting. For the most part, I found hammers at moving averages. I found pullbacks to the 50. I found defensive plays with good dividends. And I found a couple stocks breaking out that look like they might have some power to go ahead. On that note, I hope you have a great trading week. Let's take one more quick look at the futures markets. And then I'm going to say goodbye. Actually, I got one more thing to do. 550 on the E-mini, 7 on the NASDAQ. Really exactly where it was when we came on. Let me just finish with a helpless, shameless plug. Please strongly consider my meeting if you appreciate these programs that I do at no cost and a significant amount of my time. and you want me, and you want to show that, come to my meeting. You know, as long as I get a good showing and don't lose money, I'll continue holding meetings and doing these programs. I don't do anything here to make money. I've got enough money already. But, you know, if it turns out that there's not much interest in the meeting, then I think that just tells me there's not much interest in these programs too. So I hope to see a lot of you come to my meeting. Remember, email me at hgsidoc@gmail.com. And again, it's payment is confirmation. I will confirm once I get payment received. And when you contact the hotel, it's it's a high growth stock doc or high growth stock seminar. I give you all that information when you reach out to me. You all have a great time, great week. Good luck trading, and we'll see you soon. Bye now.